So in 6.5, we're talking about closing on your home. So this is really the last big step in kind of the timeline of actually buying a house, right? We start from, just looking at different options, different housing options, and we go all the way up to finally making an offer and then transferring ownership, getting the keys to owning a house. Um, so before we jump into some terms, I'm going to kind of go through this timeline as an overview, and then I'll actually go back to it in more detail later. But kind of the big, I guess, headers, so to speak. Right, to start, this whole process begins with accepting an offer. You go back and forth. You say, I want to buy this house. This is how much I'm willing to pay for it. You go back and forth a little bit, a lot like buying a car, and agree on a price of the house. So after you do that, the whole thing is going to go through what we call a title company, and that may also involve an escrow agent. We'll explain some more of what this means in a minute. Then there are a series of contingencies, usually contingencies, that the house has to pass, that you have to go through. So that way the house is up to your liking. This also will usually include some sort of professional inspection. Then we need to make sure that the title is cleared, so we need to make sure everything checks out properly. And lastly, you're allowed to walk through the house one more time. Make sure this is really the home that you are agreeing to purchase. And we'll explain these in a little more depth in a minute. All right, this all ends with all of these things being satisfied. You finally get the keys to the house. The house is yours. So let's define a few things first. A few different terms I want to talk about first. That first was an escrow agent. You heard me mention it already. An escrow agent, so if I kind of want to be formal with my definition here, an escrow agent is a person or some kind of an entity. So some kind of, maybe like a bank, for example. And this person or entity is a person that holds property in trust for third parties. In trust for third parties. So in this case, that would be like the buyer and the seller. While the transaction is being finalized. So in the middle of this entire process, right, the escrow agent finalized. The escrow agent is the person in charge of kind of keeping everything safe. Things like the title, maybe your down payment, any amount of money that you put into escrow for the time being. This is usually some type of attorney that usually manages this. Somebody well versed in the law that kind of knows what's going on. Of course, a realtor. You're probably more familiar, or maybe you've also heard real estate agent. Oops. There we go. Real estate agent, obviously, is just somebody who assists. So an agent who helps you buy or sell a house, right? Sale and purchase of, and really any sort of building or land, right? A real estate agent can help you with any sort of property. Maybe you want to buy an undeveloped lot and build the house yourself. You're free to do that, and you can still work with a real estate agent or realtor to help you do that. All right, so the next word is lien. That's lien, not lion, right? So this is pronounced like lien. So, and a lien is kind of your right or somebody's right to keep possession of a property or possession of any sort of property belonging to another person until a debt owed by that person is discharged. And this is something that can really hold up the sale of a house. Um, in this case, we might be talking about a lien that the current homeowner has against, say, the bank. Some kind of debt owed. So maybe there's some sort of outstanding loan that needs to be paid off. Maybe there's some sort of outstanding issue with the house that needs to be taken care of. All these things may be some sort of lien, and this way, the bank can say, we cannot give you ownership of this house until you pay back the debt or until you take care of X issue. And these things can really hold up the clearing process, the closing process, because it takes a while to get some of these things taken care of. So liens can actually help us segue into a title defect, right? Liens can actually cause a title defect, and that title defect is just a legal claim or some kind of a circumstance, some kind of an issue that hinders the verification of the title and identification of the true owner of a property. So maybe my example might be you are a tenant in the building, and you are found to maybe be renting out the apartment to somebody else. Well, that's an issue, right? You're not the true owner of the property. Um, this is going to get in the way. If you're going to try to sell this house, but you're not the owner of the property, you can't do that, obviously. Um, and this is going to get away of what we call the verification of the title, right? The verification of the true owner of the property. So anything that might get in the way. Verification of the title, things like not paying the debt back, right? Not paying your mortgage back, anything like that. So kind of working my way down here a little bit more. I know this is a little bit tedious, but I promise they're all important. Um, a home warranty is, well, it's got this word warranty in it. Right? It's got this word warranty in it, so it's important. It's if you've dealt with a warranty of any sort of other type of property or any sort of other purchase that you've dealt with, it's going to work a lot like that already. So this is going to be a lot like any other type of warranty. This is usually some kind of a 1-year agreement. So this is a 1-year warranty, and it's a service agreement. And this service agreement is going to cover any sort of repair, so the repair or replacement of any major system or appliance in your home, of any major system of your home. So suppose perhaps you buy the house, and then 3 weeks later, the plumbing fails or the air conditioner goes out, you have central air or something and it blows. This may help you get that repaired without having to suddenly sink a ton more money into the house right out of the bat or right out of the gate. So a home warranty can really help you out in case something turns out to be defective, right? No different than you buy a car and maybe the transmission's broken, you have a warranty to get it fixed. You get a new phone, and the camera doesn't work, it doesn't turn on properly, the battery dies after an hour. That's a problem. The warranty helps you get it fixed. The home warranty does the same type of things, right? These are for major systems. So I'm not just saying, oh no, the door fell off the house. I'm talking about the heat doesn't work, the plumbing failed, the water doesn't run, things like that. Big, big issues. Appliances. This isn't just like, oh, my refrigerator doesn't run right anymore. Major things. It's like the boiler doesn't work. If I have a well, maybe I can't get water out of the well. Big issues like that. So a rider goes actually along with homeowners insurance. So a rider is actually part of homeowners insurance. And all a rider does, a rider is some kind of an item that is added on to your homeowner's insurance policy. So these a lot of people will tend to put riders out on like big purchases. Any sort of like exceptionally not variable, valuable, exceptionally valuable items. So, for example, being a musician, all of my instruments are taken out as riders on the house. So that way, God forbid, my house were to go up in flames and take my instruments with it. Um, the losses are covered to some extent. Or if the house is broken into and like my instrument was stolen, um, I have a protection taken out against that, right? I have something to help me cover some kind of expected loss or unexpected loss, I suppose. So these are usually big things. This isn't just like putting your computer on your homeowner's insurance policy. These are big things, valuable things. Maybe things like jewelry, maybe things like family heirlooms, even. Like I said, musical instruments, especially because even on the cheap end, professionally quality instruments are already thousands of dollars and even more. Um, that's what we're talking about when we're talking about riders. So that's one side of our list of terms. Let's take a look at the other side. And these are all kind of related. So any form of contingency, any sort of contingency, is any sort of criteria put into place that, oh, I can't go over any farther, that essentially allows the buyer to back out of a sale. So you can even see this with a car sometimes. You can say, I will buy this car, but there's a dent on the hood or there's a scratch in the paint. I will buy the car contingent upon you fixing the paint or you fixing the dent. And if you don't fix the dent, then I'm not buying the car. It's the same type of idea here. Um, you find a house that you love and you notice that maybe there's a little bit of leakage, maybe it's causing some mold in the basement, and you say, I will buy this house contingent upon you repairing the mold damage in the basement. Um, and there are all different types and categories of contingencies. So you have a home inspection contingency. Um, this just means that you, the buyer, if you're buying a house, the buyer has a right to have the house or have the home professionally inspected. So, you find a house you really like, you can say, I will buy this house as long as, a professional inspector comes in and finds the house up to code. I can look through it all I want, but I'm not going to notice things like water damage or any sort of other serious thing underlying the house, maybe some sort of rot. I might not be aware of that, but a professional inspector that knows what he's looking for, they will. You'd have the house appraised. So an appraisal contingency would be to say that the buyer has the right to have the home professionally appraised. I can't spell. Professionally appraised, valued. And this is all really with an eye on saying, am I paying too much for this house? Right? If I'm under the impression that this is a $500,000 home, the appraisal company comes in and says, well, it's only worth $350,000. I have the right to say, if you don't bring the price down, I'm backing out of the sale. You're clearly overcharging me. So that's important. You have a mortgage contingency. So you have a home inspection. You need to have the home professionally inspected. You can have the home professionally appraised. You also need to make sure you have a proper loan, right? So a mortgage contingency would be to say that the buyer just needs to have a proper loan secured. So I'll just say that you need to know that you are approved for a proper mortgage. Right? How do I know that I'm able to afford this, right? This is all with an eye on saying, am I financially equipped to pay this back in some form. Maybe I don't have the cash on hand, but I have this loan lined up that'll help me pay it off. And then a title contingency. And a title contingency, so I'm using title here, not just defining what a title is. We're talking about what a title contingency is. And this is to say, is the title clear of any liens or defects, right? Are there any other issues with this house outside of the house itself that needs to be taken care of? Is there a mortgage payment that's overdue? Is there a dispute over who really owns the property? Is there, some kind of an issue that needs to be settled before I'm able to buy this house, right? The title needs to be cleared first. And that's kind of that whole title clearing process that we hinted at the beginning of this video. The last one is also important, and that's a walkthrough, right? And this is something that you are allowed to take the step of right before you actually purchase the home. And this is to say that you get one last walk through the house, kind of self-explanatory. Last walkthrough of the house. You just really want to make sure, is this house really what I expect it to be? Right? You are allowed to go into that house as you're in the process of buying it and really check things out, make sure things are working properly, make sure the land is the way you expect it, all these things, because this is such a, let me back up. The whole point of all of these things, and all of this writing that I now have on my screen here, can I make it smaller so you can see? Yeah, there we go. Is to say this is a huge financial purchase. This is a huge financial step in your life. I'm not messing around here, right? I'm about to drop hundreds of thousands of dollars on this house. I want to make sure I know exactly what I'm getting myself into and make sure this house is the house that I'm planning and really expecting to buy. By the way, you are allowed to consider waiving a contingency, but you really shouldn't. Right, you are allowed to consider waiving any contingencies, which is to say, I don't want to have the home inspected. I don't need to have the house appraised. I think you would be a little bit kind of shallow to do that. I think it's a little bit, even if you trust the buyer, I think it's just safe because, even if you trust that your friend is selling you the house and they're not trying to screw you over, they might honestly think that their house is worth more than it really is. So it really wouldn't ever hurt to kind of go through this process, even if you don't think it's necessary. Just because it is such a huge, huge financial event. It's such a big step. So these are all kind of the terms. You're going to hear me use them kind of throughout. You've probably already heard me use some of them throughout. But let's kind of talk about this timeline here. Let's really talk about this process of closing on your home from start to finish, right? So you start by accepting an offer, right? We're talking about cash. We're talking about, this is how much I'm offering to buy the house. The seller says, well, it's really worth this much. Can we bring it down at all? Can we bring it up? You go back and forth, you shake hands. This is the price that I'm going to pay for it. We're good to go. So you accept the offer. The next step is really to get a title company involved to make sure legally everything kind of clears out. So I don't want to change colors yet. So a title company does two things. Actually, I'm going to make my pen a little bit smaller here so I can fit it all. A title company is going to do two things. A title company is going to hold any sort of payments or documents in trust while the closing process is going on. So by in trust, maybe make this smaller too. You're just putting this in the care of a third party who can keep it safe while this whole process is going on. So you have a third party, an unbiased third party. What the title company does is provide insurance. They kind of insure, not insurance in like the car insurance sense, but they guarantee that a title is what we call clear. of any liens or defects, right? There's no disputes, there are no issues that need to be settled. So once you finally get the title company involved, the next step is to satisfy any contingencies. This is really your last chance to back out of the sale. And for any of those things that we said, right? Could be a mortgage, could be an appraisal, could be the walkthrough contingency, could be the title needs to be cleared, could be the appraisal. I already said the appraisal, could be in the inspection, any of these things. But what's important to note is that these are all time sensitive. There is usually some kind of a time limit on these things. They're not going to say, oh, take as much time as you need to get the house appraised. They're going to say within 7 days of the sale or within 2 weeks of the sale, which is why this process can be time consuming. Right? Because if they say you have 7 days to get this house appraised, you have 7 days to secure a mortgage. You can't just sit around and work and focus on your other things. You need to focus on this house, which is why it can be really tricky. You hear people taking days out of work to clear a title, close on a house, whatever needs to be done. One of those contingencies, and especially one that you definitely should not waive, is your professional inspection. Right? They're going to check for things that you wouldn't necessarily think to check or not know how to check. Maybe things like termites, termite damage, any sort of major structural damage. Could be they might also review the title. They'll check the plumbing. They'll check the property lines. Figure out, even just to make sure, are they being honest with how much land they own? They will give you some kind of a report. So they will give you some kind of a report or summary of their findings. You can be present, and you should be present. So you can and should be present for this sale. Sorry, for this inspection. Because if you notice or they notice something that needs to be done, you can stipulate repairs or anything that needs to be fixed as part of the sale, as a contingency. I will buy this house, but you need to fix this thing. You need to fix the plumbing. Or you could even turn around and say, you don't need to fix the plumbing, but because of the cost that I'm going to have to now dump into this house to fix the plumbing, you need to take this much more off the house. You can spin it in both ways. You could use it to drop the price of the house, or you could use it to have them do it first. All of these things, it's all playing a game, right? It's all a chess match. So you can stipulate repairs as part of the sale, either as lower the price, right? This house needs work. So decrease lower the price of the house so I have the budget to fix it, or fix it or I'm not buying it. Either one, you really kind of have that option. It's all kind of what you prefer. You've gone through, it's been inspected. Now it's time to have the title absolutely cleared. Almost to ask, whose house is it really? Right, whose house is this really? They'll probably check for homeowners insurance. Who actually has homeowners insurance taken out? Homeowners insurance. They may think about things like flood insurance. They might think about home warranties. For on the lender's end, so like on the bank's end, maybe some kind of even mortgage insurance. What happens if I'm suddenly unable to pay the mortgage? What avenues does the bank have in place? These are all things that need to get taken care of and need to get checked on. Last, of course, you have one final walk through the house. Your job here is just to make sure everything is up to your expectations. And I mean, once that's happened, you get the keys. Call this transfer of ownership. You finally get the key. The place is yours. There's your key. Um, the house is yours.